Good afternoon, everyone. Thank you for joining us for this live pop-up trading session. The markets are definitely up super strong today. A number of you know that I put on a micro future in the TastyWorks account yesterday, betting that it will go, the ES is going to go down more than it goes up in the next 30 days. That bet is so far been completely wrong, but the overall portfolio is still doing very well for today and for the month and for the week. So it's been great. You can see here across the board, you can see here on this P&L day that we're doing pretty good, and we're doing pretty good on the month. We're over 30%, so that's great. And then in this account, you can see this is the bread and butter basic type of account here in Thinkorswim. This account is doing well also. It's approaching 30% up on the year. We have a few things that is going to be coming off this week, and a few things we're trying to take off. You can see that we're trying to take off this ES position here with 36 days to go, and we're about to hit 75%. We might change that to get out at 70% because it's 36 days to go. We might as well not wait. The rest of the percentage is going to take longer to come out of. And this market is way overbought in the short term. We were looking at some charts last night with Gustavo, and you can see this is the RSI. This is what he said he likes to look at most of the time. He wasn't looking at this really last night, but this indicator is telling us that we're overbought right here. And you can just look at this chart, right? We were going up every day, slowly, but every day for the most part. And it's only going to take one day, and you'll see when we hit that one day and people start panicking, we're going to go right back down to this blue line here, which is the 50-day moving average. And I want to be prepared for when that happens, right? So do not be afraid to take some profits. If the market is, if you're up on a number of your different positions, scale back on it a little bit, take some profits or sell some covered calls against it. This market is really high right now. You'll benefit from it. If you have, let's say, 1,000 shares, sell some covered calls on half of them just to reduce your risk a little bit. You might even want to consider doing some collars on some of them, and that's when you sell the covered call and take some of those monies that you receive from the call and you buy your put to be able to hedge the downside a little bit. I could be completely wrong, but I don't care if I'm completely wrong because I can still make money if this market continues to go up regardless. I just don't want to I don't want my account to be damaged when this market drops, okay? When it drops. And don't be mistaken about what I'm saying. I'm super bullish on America, super bullish on the world economy. I just think that we are short-term overbought, and I wouldn't be surprised if we saw something like a 5% drop, and we could see it pretty fast based on recent history. All right, so I want to jump into some trade ideas that I'm looking at here this afternoon, and first thing I want to talk about is Coinbase. And you can see Coinbase has been a complete dog for the first 2 days that it's been trading. It's down again today. It's way off its opening price of 381. It feels like it's going to go to the price that people were saying it was going to open up originally, which is around that 291. We just bought one share in this demonstration account just to participate with other members, and we regret following people. As when I was a kid, my parents would say, or a lot of our parents would say, if your friends were jumping off a bridge, would you jump off a bridge? And normally we would say no, but yesterday I jumped off that bridge, right? Even though it was really small in this demonstration account, I still feel like it was more it wasn't wise because we are primary option sellers. I should have waited for the options to come out before I started playing this Coinbase. But with that said, when this drops under 300, I'm going to buy another share, and hopefully this will pop back up and I'll get out of it. And then when the options come out, I will start trading this with options. But I am just like Duvel, I am bullish long term on crypto currencies. But you can see that most crypto stocks are dropping, if not all of them. But the currencies are doing fine. You can see that you have Bitcoin here. This is up today. Let me get my cursor to work for us here. Bitcoin is up. Ethereum is up. And if I looked at, if I go here and look at Litecoin, which I sold with a very small profit, which I didn't sell at now, but I was trying to reduce some of the risks in the cryptocurrency arena. And you can see that Litecoin is up, and it's up huge, right? It's up, it's leading the world right now. It's up 4%. It's about, man, that would have been nice. I think my average price for Litecoin was about a little under 200. So it's up 85. That was smart. But you know, that's the nature of trading sometime. And I guess if I had to do it again, I would do it, because I didn't want to be too concentrated in this small account with too much cryptocurrency, because RIOT and Marathon have been just complete dogs, and they have made me nervous about the crypto space. So you can see Marathon here is down again, and you can see RIOT is down. Our Marathon position though is a hedge, so that's decent, but we're losing on the overall position, obviously, because we're down on the RIOT position, which is 15 days ago with a 43.5 strike. I'm still comfortable with that. If we go and look at the delta on it and go over to this trade table here, and we look at the delta with 15 days ago, we're at a 36 delta. So I'm going to let this play out just a little bit, see if it gets a bounce back tomorrow, because they have been brutally beat down, especially in the last 2 days. So if we look at the chart here with on Thinkorswim, maybe we might see the opposite in this RIOT. So the RIOT is going towards oversold, but not yet, right? Not yet. But it's been a while since it's been overbought. You can see it's not the case anymore. It's more down, bigger down days than up days now. So that gives me pause on these kind of stocks. All right, so with that said, let's look at a couple of trade ideas. One of the trades I wanted to look at is Disney. I was trying to find some stuff that was down today, right? And Disney is down today. So I like that Disney is down, and I would like to be bullish on Disney, because I'm bullish on Disney big time long term. When you have a kid that lives at home, especially a 3-year-old like mine, you know, Disney's a great friend when you need a second to do something. You know, you can watch Rapunzel, or you know, whatever she loves to watch, right? So with that said, we have Disney here, and I'm going to look to do a 22 days to go. We have earnings coming out on May the 13th, and this is I'm trying to get this trade in before May the what was that I said, May the 13th. So this is going to be May the 7th with 22 days to go. And if I look at the 14 delta here, and I do something like this, a put spread, that's only going to give me about $54 for 600. Let me see if I do something like this. That's $40. I do 2 contracts. That's still not enough, right? If we want to receive at least $100. So if I go here and I do 2 contracts, that's going to be more than the buying power that we want to use. Return on capital is going to be less than 12%, so we won't do that. And we would have to, on one of those rare occasions, we would have to go higher, in this case, to the 19 delta. And if we go to the 19 delta, this is about let's see what this looks like here. This is nice. All right, so this is a 5-point wide spread. We're getting 116 over 884 with 22 days to go. This is a short-term trade, playing that Disney will not go to that 175. We're outside of the expected move still, even though we're at the 19 delta. This is one of those 10% of the time that will go a little higher than the 15 delta. This is not a yellow highlighted trade. Yellow highlighted trades are no higher than the 15 delta, really solid type of trades. But so I'm going to look at this anyway, though, and so I wouldn't consider this, once again, a yellow highlight trade. Let's look at Disney just to see where it's been really quickly. And it's just below its 50-day moving average. And let me see, I just want to see where that low has been. That's like 178, and we're looking at the 175. All right, I'm ready to rock and roll with this one. It's going to give us more than 12% on our buying power. I'm going to send this here, and we're going to see if Disney gets filled. Once again, and what I was mentioning to everyone with this Coinbase, the plan here is that if it goes below 300, I'm going to buy another share. I think we sold this at around 360. So if let's just say we get it in at 291 plus 360, that's 651 divided by 2. That'd be 325. So we would only need it to go back up to 325 before we break even, because our cost basis would be around 325. So I will do that, ring the register on it, and then I will play this with options, because that's my strong suit. So we'll wait. The options going to be out in a week. They're usually out pretty quickly on a stock that's this popular. So it's going to be fun. Let me see if they even brought it out faster than normal. All right, so no options yet. That would have been super fast. All right, so looking for that Disney. We'll see if we can get filled here in a second. I was also looking at Southwest Airlines. That was down when I was looking at, once again, I was taking a look at things that are down in this big open market. I'm playing the contrarian, saying that, okay, these are great companies that that's going to benefit over the summer and this year. And I'm only, trying to do this for a short period of time. It's only short trades. So looking at Love, which is Southwest Airlines, go over here. That's one day to go. That's an earnings play. I didn't see that, so I'm not going to do that. I don't want to play the earnings on it. It's just not my game for right now. But it would probably be fun. Let me see. It's not a lot of premium in those options, so it's not a lot of play with that one day trade there. So the earnings is actually on the 22nd. So this 8 days ago would be a little less. I mean, after earnings, so I don't want to do that. We could play that and get out in 8 days, but we already did a short-term trade. Let's look at doing something that is a little longer. So we go to this. I'm going to look at this Halliburton. This is something that is down today as well. You can see that their earnings come out at April 21st. So we're going to bypass that as well. We look at Exxon, the earnings are probably coming out as well. That's on May the 2nd. So we already did a short-term trade in this, so don't want to look at that. I'm going to try one more thing here, and then we're going to go to an index. So this is Ford. This is earnings are coming out on the 28th. So that's 8 days. Don't want to do something that short right now, based on how I feel the market's might going to go down here in a second. So what I want to look at is the Russell hasn't went back to its all-time high yet. Everything else is pretty much there. The NASDAQ, the ES, the Dow, they're all there, right? This Russell, though, is still off its all-time high. So this is the contrarian play of this market, if this market is going to continue to go up. So I want to look to play the Russell a little bit more, and then I also want to look to play the one other thing Russell's not down, but emerging markets, right? So I'm looking at these emerging market positions. These are all ETFs here, right? So we don't have to worry about the earnings. This RSK, that's Russia, that's down today. I don't know why it's down, but I'm going to look at the chart here, and it's down just a little bit, right? It's near its 50-day moving average, which is this bluish line here. So let's look and see if we can do something in this index. Yes.
That's a Russia index?
I'm about to look at it. Yes, it is. It's a Russian. It's an ETF here.
The president is going to put financial sanctions on Russia that for the first time that will hit them financially. It might be why.
Okay, that's a good point. But so far the market is saying blah. That's a small drop right now. When is that supposed to take place, Dana? Do you know? Is that going to be done?
I just heard about it this morning that that's going to happen.
Okay. Okay, interesting, interesting. All right, so
Yeah, and they're going to kick out some people too
we're gonna kick
out of
out some.
US.
Okay, so now we're gonna start another, another Cold War,
Yeah,
huh? Let's hope not, right? We
which will
already
drive Russia to Bitcoin.
and Russia to China or more, I guess. But with that said, I don't like the options with this 36 days anyway. It's not a big move that's going to happen in this currency. Excuse me, in this index, this ETF, and you can see that it's pretty much nothing around here, right? So I mean, premium wise, you would have to go as high, you have to go to the basically at the money to be able to do anything, even if you were doing a strangle, right? So I don't like that. So we're gonna move on from there, and let's go to the Russell. I want to try something that I want to try the RUT first because a number of you don't have options on futures. So I'm going to try the Russell with the RUT first. And what we're going to do is try to, let's see here. We're going to look at two things: a no upside risk iron condor, even though I think this is probably it's going up. That is the most we can lose on there. That's they jacked this Russell up. That's 10 points wide, and that's no fun. Let's look at a different expiration. Should be about 5 points wide. Let's look at the 43-day here. See if we get 5. Nope. They've made this less tradable. That's brutal. All right, so unfortunately, we're going to go to what I like better anyway, because this is going to be it's better than a rut, and it's going to give us a better shot to trade this. All
So,
right, so
O'Brien, you just
yes,
jumped in 1 second and decided that it was untradable. Why?
okay, good question, MM. The reason why is that um, for the no upside risk iron condor, it was not tradable. The reason why is this this these strikes are 10 points wide here, and we would need it to be 5 points wide to do it. So for example, this is 10 points wide, and so the max loss is 670. So for us to be able to have no upside risk, we have to receive at least 670, but we want to receive more than that. So if we went down to this put side, and let's say we went to the 15 delta, we don't want to go higher than a 20 point wider than a 20 point wide spread. So this is 20 points here, and this right here is giving us 560 and in profit now. So we still need to do at least one more contract. So I would do one more contract, and that will give us what we need, right? But the buying power effect is way too much for this account. Okay, it's way too much for this account. Even though it's 12%, as you can see. I mean, it's way more than 12% on your return on capital, but it's too much for this account. So I'm not going to do this trade. So maybe I should rephrase what I said regarding untradable. It's for this account it is, and for a number of accounts it is, but for your account, MM, not so much, right? You can trade this, but I still like the RTY better, regardless of what size your account you're trading with at this point. So for example, that was like $3,800 to do that trade. And what we're going to do is change the expiration periods here. I'm going to call this a high yellow highlighted trade, even though it's going to be 29 days to go. The reason why I'm choosing 29 days is that we have something in 8 days. We have something in 36 days. I don't want to go to the 64. We could if this 29 does not look nice. So what I'm going to do is I'm going to go and this time what we're going to do is we're going to do a bullish bear. I'm going to show you this for a second. This is all 5 point wide. I'm going to show you that no upside risk iron condor really quickly. We're running out of time, so I got to get this trade on. So this right here is 1 point. This is 5 points wide. The max loss is 170. So if we go down here and we do and then just say just for demonstration purposes, we go to this this 15 delta here, and let's just do a 40 point wide. So let's go to this 40 here. So in this case, we're receiving 295, which we would have no upside risk. And you can see that the buying power effect is insignificant, right? The max loss is not that bad as well if we were experiencing max loss. So I like this no upside, and there's no upside risk iron condor trade. It's pretty nice with that, right? So, but if we wanted to, we can also switch that up and do a bullish bearish strategy. We haven't did one of those in a second, and we can go over here and we can buy the 30 delta, sell 5 points lower, and you can see here that we are receiving, it's the same kind of strategy, but this time you have you still don't have any no upside risk, but you have an opportunity to make a little bit more than what you're receiving. Okay, so that's because of this bearish trade here. If it falls in between, we can make more, but we're receiving 145 in premium. So after fees and commissions, you can't do this trade, unfortunately, on TastyWorks with 2 trades, and you can only do it in 2 trades. So we're going to receive about 140 after fees and commissions. I'll show you this curve view really quickly here, and you'll see that this is no upside risk. This is the at the money line. If it goes up, we win all the time. If it goes down, we can still win, and as long as it doesn't hit this one here. But if it falls in between here, we can actually make more money. All right, so what we're gonna do, we got 7 seconds to go. I want to do this no upside. I want to do this bullish bear one, so I'm gonna have to do it in 2 trades. What I'm gonna do here, in this case, I'm going to do the long put spread first, the bearish put spread first. I'm gonna write down this 280 here, and I'm gonna hit this, and I'm gonna hit this to delete those. I'm gonna come back and do that, right? So we're gonna send this to buy it. That's gonna be a debit of $64, and we're gonna try to get filled. You do the bearish part first, because what had happened? Oh, I got this in. There we go. All right, you do the bearish part first, because then you can always get the credit that you want if you need to. And I don't know why they're making that go up with this market is going up higher, but it's the last few seconds, so they're trying to rob me for my prices here. Should have put the trade on before I started yapping on this session first. I should have did the trade first. But anyway, we're gonna do this anyway for illustration purposes, and we're gonna get filled. This is gonna be about $70. Come on. All right, so still don't want to fill me with, and if they're not filling me with the buy, they're definitely not gonna fill me with the sell. All right, so I don't like that at all. That's really frustrating. All right, so let's go. I'm gonna try it one more time, and I'm gonna get the monies back on the, it should get filled in any second now. Yeah, we got filled at 135. It's about let's just say it was like $75. So what we're gonna do here, we're gonna go to this 15 delta here, and we're gonna sell this, and we were doing a 40 point wide spread, so that was going to be the 40. Let's see what we can get here. It's gonna be the 40, so that's gonna be 213 before fees and commissions, after fees and commissions. So 208 minus 75 is 133. So we're still getting 133 if we can get filled at this. So that's the goal, and we have about 5 minutes. So we'll see if they'll give us a fill here. We're gonna sit there for a quick second, but if they don't, we're gonna change this really fast, and we're going to replace the order, because I want to get filled for at least that on this trade this time. And all right, so what I'm going to do is cancel this order, and then we're going to replace it. Actually, let's try one more time, just like that. All right, so perfect. So we got filled. I'm going to make sure we got a credit. So we're going to go, I know we got a credit. I'm just going to verify what we received. So we're going over here. We got RTY for today. And we just did, what did we just do? I think we took some profits on some stuff. So we just bought that one, sold this one, bought this one, sold that one. So it was this is the trade. This was what we did earlier in the day, as you can see with the timestamp here. So we're not including that. So in this case, we're getting 145 minus 10, let's say minus 13. So we got the 145 minus, let's say 14. We have minus 14. We got 131 that we received. So that's what we want to do. We want to receive at least $100. We already got the built-in hedge, so this is perfect. To me, that's a yellow highlighted trade, and we are rocking and rolling. We still have that micro hedge on that we have. There was the micro futures contract that we did. You can see that is not doing well. We're down 145, 141 on the micro future. That's fine. We're willing to lose 500 on it, and we're up 25 on the hedge that we have on it, where we'll stop losing if it keeps going up. So we will see how tomorrow plays out, but this was definitely a bullish day. And only thing that didn't really. Yes.
Can you show me your ES? Did you move the put side up, the no upside risk one, the first one?
Yes, I did. I did that yesterday and put it in the Telegram. So this is 22 days ago. I moved it to these strikes here. This is the 38.70 and the 38.10, and I haven't touched the upside, no upside risk. You can see it's deep in the money, but it does not matter. It's no way we can lose on it, even from the original trade. What I did was just collect more money, so it's just making the situation even better. As you can see, this is deep in the money, and we're up $205 on all our ES stuff today.
Yeah. Thanks, O'Brien. So then, do you maintain the same width when you move that?
Yes,
up?
yes, I did. Yes, I believe I did. This is right here is a 60-point wide spread. So if yours is 60 points, yes, I did. I usually do that almost at least 95% of the time. I maintain the same width of the spread.
Okay. Not to change your buying power, effective buying power, is that the reason?
Correct. And that's the reason, not to change the buying power and not to change the actual risk, actually lowering the risk, because if you're at 60, if your spread is 60 points wide and then you collect more money, then you actually reduce your overall max risk because you collected more cash. So that's why I try not to change the width of the spread. If I do, if I do, at least half of the time when I do it, it's reduce the spread, so it's actually reducing the risk.
O'Brien, the other is, are we going to do anything with that RIOT and Mara, or just wait and watch?
So we're gonna wait, right? It got a little better this afternoon. We're gonna wait. I'm gonna wait until it hits the 45 delta. Right now it's showing a 31, so we have some time, right? We're just gonna let it play out. We got 15 days to go. We're more than 3% away from the price for what it's currently trading at. And then once we get a profit, let's say get 20-25%, probably ring the register or roll it out to get more capital later. So I think we're okay with it now. And if we're not, we'll roll it out. It's not that big a deal, and we're doing well on the Myra hedge. That goes the bell, everyone. The regular market has closed. Obviously, the futures are still up, but it's been a good day.